Hey guys, what's popping? Yeah, so it's been ages since I dropped by, yeah. But I'm super excited to be back. Yeah, I'm super excited to be back. And top of that, I also have a couple of contents that I'll be dropping in the coming weeks, in the coming months, for the rest of the year, and of course beyond. So this one is going to be based on weekly series, this particular one. Yeah. So I resolved to share my pre-market analysis here every Sunday going into the week. So I show you my projections, yeah, based on what I'm currently seeing in the market. Yeah, in as much as I know that it is tentative, yeah, by that I mean that it's subject to change uh, depending on what market, yeah, prints from Monday, Tuesday, and of course Wednesday, Thursday, and Friday. So without wasting time, let's get into it. So, right, of course, most of you who have been here for long understand that I trade majority, um, foreign currencies and of course, major pairs, GBPUSD, EURUSD, and the like. So, I like to start with DXY because it gives me a clean, um, narrative. It gives me a clean direction when it comes to understanding where market would likely gravitate towards. All right. So this is a weekly time frame. Most of the time, I like to start from the daily, but in a couple of days and weeks, I think, yeah, in a couple of days, market has been so sloppy and yeah, very silly. Yeah. So weekly basically looks a little bit more clear, looks a little bit clearer. Yeah. For me, so I like to start from the weekly time frame. Yeah, but if you're a day trader, most of the time you would want to start um from your daily time frame. Yeah, most of the time from your daily time frame. So this is our weekly time frame, and apparently we are in a downtrend, right? We're in a bearish market, but as as far as I'm concerned, based on the concept that I trade, all right, we just took out this low, yeah, and the price is way at discount of this entire range from this high to this low. We are at extreme discount. In as much as I expect price to come all the way here to tag this sell side liquidity and ultimately this one. But I expect that for price to come down, it needs to go up first to raise some internal highs before coming or pushing down. So my expectation is to see price go a little bit back into this range high to this range low, and picking a two from that high to this low. Oh, sorry, it should be the other way around. From that high to this low, right? So you're below 50 right now, yeah. And it is a valid range because we have a swing high and a swing low. A swing high, sorry, is a high that's you know raided liquidity or created a stop on before a break of structure. While a swing low is the low that also raided the previous low before pushing to break structure to the upside. So it makes a lot of sense. I don't want to spend too much time on that. This is basically my area of focus for today, right? This entire range here. Like I said, price has been very slow, apparently, from what we see here. It has been very slow and more like a ranging market in the last couple of weeks. So, what do you have here? Currently, price just took out this SI liquidity. I think about weeks back. Yeah, this low here. Yeah, this is our swing low, external low, and this is our external high. All right, so the moment price pushed this SI liquidity, reverted instantly with a bullish candle, and it's ever since has been respecting most of our bullish reference points, which started from A1. We have that as our bullish order block, or we can also decide to pick this last two bearish candle before this up close candle that closed above it, which is fine. But let's just go with this. I think I have to enlarge my screen a little bit. So price pushed this low, gave a stop on, did not close below it. So this is apparently a stop on along the breakout structure. All right, created a what? A bullish order block on our weekly time frame, expanded, came back down. All right, reacted off this what? Order block and gave, what do we have here? A bearish order block, sorry, gave a bearish candle, and the next candle engulfed the what? Previous candle, which also validates this one here as our what? As our bullish order block on a weekly time frame. So the moment price closed here, the next week's candle came, traded back into the range and also expanded, did not close inside it. All right, so we have a previous order block that closed inside the previous order block. So when you have an order block closing inside the previous order block, it is called a propulsion block, right? It's called a propulsion block. A propulsion block. All right, so how do you take advantage of this simple concept? It's very easy. Propulsion block is usually very much reactive than an order block. You usually do not expect price to get to or go beyond 50% of the entire order block. So this one is a proportion block, right? So usually I don't expect price to go beyond 50% of the entire range, or mark out the body candle, right? Just the body candle, because that's where you have majority of the volume. Yeah, usually price should not close below 50% of the proportion block before pushing up. So validate this as a proportion block, and price, rejected of. And the next day's candle also did not even come down here, came to react off the week of previous week's candle. And as you can see, so moving into the week, this is what I'm expecting. We have an internal high here, or should I say, yeah, internal high. This is our external high, basically. So I expect price to go tag this high because we rotated off this one. So we have a bullish order flow currently played on our weekly time frame. As you can see, price has been respecting our bullish reference points and has been disrespecting our bearish reference points. This high here, basically, this high here, so I said this high, this week here, it's long week, basically could be referred to as a rejection block, right? And most of the time when price gets to 50% of it, it rejects off. And if it rejects and fails to break through the upside, and you expect price to go back into it and take out the eye, right? That rejected of the 50% of this particular range. And if it takes it out and closes above it, then it's going for this ultimately. And perhaps we may also see price tag this eye, who knows? But I'm more confident that price would go for this eye, right? Before any sell expectation, yeah, going forward. So let's drop down to our daily time frame then to 4 hour, and we go to our currency pairs from there too. I'm going to leave these levels marked out, right? So that we make reference to them going forward. Remember, this is the previous candle I marked out as a proportion block. So this is the recent I am seeing, and I expect price to go down these two eyes here. These two eyes here, we could refer to them as relative equal eyes or low resistance liquidity eye, right? Because this did not create a stock hunt. Okay, looks like a swing eye to me. Moving forward, if you also check from here where price is reacting off from this daily time frame perspective, you notice that we have an inversion fair value gap here, which is also a bullish reference point, right? That could be used to validate a bullish market. So we have a low here, high, lower, higher, low, higher, high, higher, low, higher, high, higher, low. So we expect the next higher high, yeah, in the coming week. So what do we have here? From this range low to this what range high, we have an order block here, but I'm not sure price would need to come all the way down here before going up. So I'd rather pick this fair value gap here, this here, as my reference point to support price to the upside. Yeah, yeah. I'd rather pick that as my reference point to support price to the upside. And if you check properly, if you mark 50% of this entire range, so if you mark out the entire range, notice that price rejected all 50% of the range, right? Or let me take out the yellow line so you see properly. you'd notice how price rejected off. Yeah, nearly 50%, or yeah, I think 50% if you check well, or if not exactly as 50%, just nearly, yeah, and fails to close within it. So that's a very nice indication that we would likely push forward. Look at this immediate highs here. We have relative equal highs up here, relative equal highs up here, as you can see. So we understand the major draw on price. When price creates or engineers recent highs, recent lows, right? Relative equal highs, relative equal lows, London highs, London lows, or just basically any session high or any session low. Price is constantly engineering liquidity, creating gaps to come and fill. And at the end of the day, so all of these concepts basically are just to attract price towards that direction. So price engineering this I basically before coming back down to reprice this level because it needs to go back and take our liquidity. So we have liquidity here, which is in form of buy side liquidity. We also have liquidity, which is also in form of buy side liquidity, and we also have up, this one up here. So the idea is to ensure that you have established your draw on liquidity before, finding entries at all. Okay. So if you want to buy a market, you should ensure that you have established your draw on price, which is to the upside. We have many of them. We have relative equal highs, just like I mentioned earlier. We have relative equal highs. We have um, low resistance, liquidity highs, and all those stuff. Yeah. So moving forward to 4 hour, then we'll go to GBPUSD and EURUSD. All right. So once you get your daily time frame, correctly outlined um without any noise, right? With much clarity, without noise or confusion. And I feel like you can always hold on to your H4 or H1 um setup, all right, or analysis or whatever it is you have on your H4. Okay. So this should not sway you. If you have any form of consolidation, or sometimes price could be very silly. Sometimes you have series of rejections here and there on all of that. All which should make you hold on to your bias is this basically. So for as long as price does not close below this daily reference point here, right? As long as price fails to close below this daily reference point here, close down, then we are so bullish. Okay, price could come, trade down, perhaps into this other block and still go up. But for as long as we do not close inside it and close below the range, then we are good. So I'm also expecting price to close out on this range here. I want price to close out on this range and use it possibly as an inversion, right? Inversion before pushing to the upside. So that will be my expectation going into the week on DXY. Nothing serious. Yeah, on 4 hours, I do not really think there's anything, yeah, anything serious going on here. But I like the price action I'm seeing on my daily time frame, right? Rather than expecting most of my bullish reference points, which is um very encouraging, yeah, to see. But yeah, expecting price to open, perhaps drop down a little bit. You never can tell. Manipulate maybe during London session, Q zone or whatever, and from there starts to go up. So I'm bullish on DXY all in all. I think that'll be all on DXY. Now moving forward, Euro USD. So something very similar. Euro USD is a direct opposite of DXY. So by that I mean Euro USD does exactly the opposite of what it does the exact opposite of what DXY does. So apparently we just took out what not just we took out a major buy side liquidity on the weekly time frame, and yeah, as you can see, price drops down at the moment you took that high, created a bearish order block, right? So this is how you validate your order block. In this scenario, in this case rather, we have the last bullish candle, yeah, that was formed, or that actually caused the stop on, right? And closes, of course, with the wick. So you go to your next candle and wait for that's if you're in a live market situation. But if you're analyzing and just want to see what market would uh, would do in the coming days, so you highlight the candle that actually caused the stop hunt, right? And observe the next candle if it's an engulfing candle, and by that I mean a bearish candle that comes to close below the candle that caused the stop on. This is the candle that basically caused the stop on. It could be on any time frame, either weekly or daily or 4 hours, right? So they're all valid, or even 1 hour. Yeah, price action is valid. Market is fractal. All right. So whatever you see on weekly time frame perspective, it is valid across all time frames. So when you mark out candle that actually caused the top point, the opening price preferably, right? And observe the next candle. If the next candle closes below it, then that is your order block, right? Closes below the opening price and preferably the wick of the candle that caused the top one. So that's your order block. So your order block is not just a candle that broke structure, in as much as that could be valid. But that is not entirely true. Okay, so you mark out this, and if you have like consecutive down close candles, like we have consecutive candles like this, 1, 2, 3. You can mark the whole candles, all of them, 3 of them. Okay, so once price goes below them, right, below the opening price of the first one, right, starting from here, this is the first one before the third one, mark out the opening price and expect price to close below it and preferably also go below it, all right, so which in this case happened. And the moment it happened, see what happened, came back into it. It happened here this particular week, Monday 6th, Monday 6th, 2025. Happened this day, and the next candle opened around here and went back into it and rejected apparently. So we are within the order block right now. Not within, but price already traded in, and the next candle came and did not go into it. So from what I see, feel like the next draw on liquidity should be this one, right? One of the things you need to understand as an ICT trader is first objective is to look out for what price has done. Where is it coming from? What has it done? Took out what? Price side liquidity, right? Stopped on that high, right? And once you have a change in state of delivery, you highlight your possible draw on liquidity, which is this one here, sell side liquidity. All right. So this is your next draw on liquidity. And by that, I mean, if we want to sell, right, there should be an objective for selling. I'm not just selling because we have another block here. We are selling because price would most likely gravitate to where there's liquidity. So this is an old low. The price would need to read, right? There are orders here, there are sell stops here. The price needs to offset all of these sell orders down here. All right. So once they offset these orders, smart money would buy below, sell stops to go, and on for buy stops. It's that simple. That is the cycle. So that's for weekly time frame. So let's go to the daily and see what we've got. Right. And as you can see, same thing that I highlighted on the weekly is the same thing that I'll be explaining here. So this is daily time frame. The last bullish candle, right, across the stop hunt. You can also highlight it, but I don't want to go into all of these details. Highlight it, close below it, price went back into it. I think 50%, which also aligns or is in confluence with this balanced price range. We have a balanced price range here, right? We have a balanced price range here, and it rejected off instantly. So let me just put that there so that my chart does not look messy. And you'd notice how price kept on respecting our bearish reference points and started to disrespect our bullish reference points, right? Price started to respect our bearish reference points and started to disrespect our bullish reference points. So that in itself means that there's a change in order flow. All right, price has changed its structure, so to speak. So the ways to even identify change in market structure, other than a break of high, a break of low. When you see that price has invalidated or starts to invalidate, starting reference points and start to obey opposing reference points, just like I rightly said here. All right, sorry, as I previously said, concerning this one here, we have other blocks here, bullish order blocks here. Right? We have many of them, all right, that sponsored price to take out this high. So once price starts to disrespect this flow and starts to create a new flow, then that is a change in order flow. Call it change in institutional order flow. So we're bearish, right? We have this as well. Series of up close candles, right? Price broke below them. This is from the weekly time frame. Let me just take this out so that I'm not confused. Series of up close candle, price went back in and closed below. So this is what we have going into the week, right? Or we can also decide to pick this one anyway because that's where price basically rejected off from, which is fine. But sometimes price may not get to the extreme order block before pushing down. Could just react off from this what from this first candle here itself from there, which is still fine. So price traded back into this range, sold off, created an order block here, right? This is an order block, right? So, but for us to be sure that price would would reach out for this low, then price needs to break below this entire one, two, three, these three candles. Price needs to break down, break below and close below it. And it does that, then we're certain that we'll most likely continue to the downside for the rest of perhaps the month, depending on how fast price wants to go. But currently, this is what we have right now, just like I already explained on GXY. So we're currently within this other block, which is also in confluence with this one here. This is a CB, right? This is a CB, or we call it a balanced price range because we have a BC intersecting or overlapping with a CB. We have this overlapping with this. Okay, but I think this is very much valid because it's a stronger concept compared to just a CB. All right. So when you have a bullish fair value gap overlapping with a bearish fair value gap, it is called a balanced price range, BPR. And that to me is a very sensitive zone where price usually just reacts off from. So if we decide to mark out this, we notice that price did not close above 50% of that range. Which is some good signs of bearishness, right? Which is a good sign of bearishness. Price did not close above 50%, right? I don't want to say price close above 50% of the entire range if you're bearish. And okay, it's selling off from here. So going into the week, you also have some low resistance liquidity. You have relative equal lows here, just like we have relative equal highs on DXY. So we have relative equal lows on this, right? And going into the week, I expect price to drop down. Yeah, I expect price. I don't want to see price close above here or go above here if we're bearish. I expect price to drop down and drop down, drop down. Yeah, to tag this relative equal lows here. So we have relative equal lows here, which is our sell side liquidity, which I believe price would want to reach out for. Yeah, perhaps on Tuesday. I don't expect it to happen on Monday. So expect price to probably push up a little bit on Monday, maybe on Tuesday, then on Wednesday creates the high of the week, and from there we can push down. So if we're going to be bearish for the week, I expect the high of the week to either form on Tuesday or Wednesday. So usually I do not expect that to happen on Monday because it does not really look like we are really trending. Okay. So we only have high of the week form on Monday when we are really trending. Right, but it doesn't look like we're trending here because price is just it has been ranging here for the past couple of days. All of this happened, I think, on Friday. Nothing really significant happened, even with the fundamental. It just basically ranged all through. So going into the week, right, like I said, I like to see price close below this one here. Yeah, so once it closes below this, then we can start to find our entries for sales and boom. Okay. So that is if you want to continue to sell from here. But if not, we just want to be patient and see what happens within this range and react. So that should be that on EURUSD. So in summary, I'm bearish on EURUSD. And of course, GBPUSD, I'm also bearish on that. So we'll just quickly analyze from the weekly time frame. And on the weekly time frame, yeah, you notice how DXY took out its recent low. EURUSD took out its recent high, but GU failed to take out its recent high. So this is what we call SMT divergence. SMT divergence, right? This is showing a weakness in price action, right? Let me show you what I'm saying exactly. This is what a higher high, a high and a higher high, right? So for correlated assets, you should expect them to create highs and lows that are in the same direction, right? So if you have a positively correlated asset, or we have two positively correlated assets, they should be forming highs and highs, lows and lows, yeah, at the same level in the market, or at the same levels in the market, right? And for negatively correlated assets, when one is forming a high, the other should be forming a low. Okay. But let me use EURUSD as a case study. EURUSD and GBPUSD because those ones are positively correlated. The EURUSD gave a higher high, right? Took out this high, but GBPUSD failed to take out its high. This is basically the asset you want to follow as far as price action is concerned. So very simple. The fundamental approach to this is that once you have this form, right, this one basically is just a stop one because this is a fake price action. This is the one um you should make more trading decisions on, yeah, based on what you have here. So this is showing a weakness in price action. Why that one was showing basically um stop want and nothing serious, right? So you don't want to consider that as a bullish market. You don't want to say, oh, price took out that high, then we're bullish now. This is showing a weakness in price action because we have a shift in market structure down here. All right, so moving forward, nothing much to see here from these eyes, right? Other than what we have here, we have relative equal lows here currently, and price is slowly gravitating towards the relative equal lows. Yeah, slowly gravitating towards the relative equal lows, as you can see. And if you also check internally, we have this high here, price to cover internal high, right? Remember the last bullish candle that formed before that this thing that stop on occurred. You mark it out. If you have to, you mark the two of them out, right? Which is this, which is that, right? And expect price to close below the two of them, below the opening price, which happened here. Price went back into it a couple of times, I think twice, and so we have another one here. This other block here. So this bullish candle here went in, right? Did not close inside it, created another other block. So it created another bearish candle that closed below it. So it makes this a proportion block, just like I said on DXY. So this to me is a proportion block, right? Because it closed inside this particular candle, it rejected all this particular candle, and we have this breaking below it. We validate this as a proportion block. So going forward, what do we have for the week? Remember, this is our weekly time frame, right? And we have a draw on liquidity here already established, relative equal low. Right, so these are draw on liquidity here because price has taken out one, this recent high here. Of course, no, one, because you have an SMT here, two, took out this recent high. Yeah, course, gave a change in state of delivery on the weekly time frame, sold to the downside. You can decide to even use this sold candles as a CISD. Went back in, came sold. This went back in, came sold. Did not close inside it. So let's go to our daily time frame. Remember, this is our drawn liquidity. So we are bearish because price would likely gravitate towards this low. Price would likely pull for this liquidity down here. Or let me see. There's something I want to show you on weekly time frame. I think you also have an inversion here too. Nothing really serious. Let's just go to daily time frame. Yeah, our daily time frame. Remember, we have this relative equal lows here. Can you see this one looks clearer here? Looks a little bit clearer here. Yeah. 1, 2. Mark out these two candles. Boom. Price went back to opening price of that candle. Rejected. You have two candles here, right? 1, 2. Mark out the opening price. Price went back into it. So all of these candles here, other block. But you can decide to mark out these two here. This one here. These two here. And that is exactly why price came into. So going into the week, what am I expecting? Yeah. I don't just expect price to start selling here on Monday, and that is one mistake you don't want to make. Usually, I wait for Monday price action to just, you know, to do whatever he wants to do, to pan out the way he wants to pan out, especially Monday London session. You don't want to find yourself trading Monday London session. Like, what do you want to be doing in that kind of market? So we have an inversion here, right? Remember, we are bearish, and this is our attraction towards the downside. So all we want to just look for basically you want to look for bearish reference points, especially on your daily time frame and 4 hours time frame that should support price towards where you want it to go to. Forget patterns. You don't want to trade patterns here. Forget the patterns most smart money traders in code like to trade. Stop on break of structure and all those stuff. Ensure that you understand the narrative from your daily time frame perspective. So once that is settled, then you don't have much problems. Yeah, I tell you for free. Every other thing becomes a tape. Just understand where price will likely go first. That should be your first duty as a trader. So we have an inversion here, right? The first time it closed below that inversion, this this is an inversion. Inversion is a bullish fair value gap or a bearish fair value gap, basically that fails to hold price. So when price goes back into it, you use it as some form of resistance or support. All right. So in this case, we have an inversion fair value gap, which is a BC. Normally, if we're bearish, price is supposed to expect this bullish fair value gap to push the upside to probably take out eyes. Or in an event where price fails to respect it and closes below it, you anticipate a reprice into that range, sometimes 50%, right? Or sometimes 25%, sometimes 45%. Okay. Sometimes we have some quadrant levels that, yeah, some quadrant levels that you want to mark out. Quadrant levels, you have 25, we have 0.75. So we have 25%, we have 75%, we have 50%. 50% is just the consequent encroachment, which is and the equilibrium point, right? Where price usually reverts from. So if it does not reverse from 50%, then it should reverse from 75%, right? But if we're super bearish, then most of the time it will react off from 25%. So price did not get to 50% of the inversion, as you can see, did not get there. So I'm expecting price to continue to push up here. Yeah, going into the week. Going into the week. We may still push up a little bit, but I don't want to see price close in there. That's the point. I don't want to see price close in here. If it closes in here and closes above here, then the price reaction is just basically being unnecessarily dramatic, and we may just want to range until price action is cleared. I'll just sit down, sit out and do nothing. But from this price action that I see here, feel like we should push down on this daily time frame, right? So let's go to H4. I can go to another pair from there. So we're bearish. See so many people trying to buy this pair on Friday because of this expansion. Okay, I think it was here, yeah, because of this expansion, and because they consider this as a reclaimed order block, which is actually not wrong. But the context here on daily time frame is very different from what you see here. So they want to say, okay, this is stop on break of structure, order block, inducement, then you want to buy from here. This is typically what most smart money traders do. They see this as a reclaimed. And for people who don't trade reclaimed, they'll see this as a stop on, right? Let me just mark it down so that you see it. Stop on, which is actually a stop on, but contextually, that's why context is very important. You would save yourself a lot of stress when you don't just read context. Sorry, concept, but other context. See this as stop ons, break of structure, inducement, and from here they want to buy. I know majority of smart money traders would want to buy up from here. But logically, from the daily time frame standpoint, it is not valid. For me, as far as I'm concerned, even if it comes here now and holds, I do not think I want to do that. Except we have this, except we do this. Even if we do this and DXY does otherwise, DXY gives me keeps on giving me that um buy buy signal. Get my point. Like he wants to go for rating because I'm not going to buy this. Even if you have this price closes above this one here, I do not think I want to engage the buys, right? Based on what I'm seeing on daily time frame and of course based on what I'm seeing on DXY. So context is very, very important. If there is zero context to what you're doing, then they're just trading patterns. They're trading just patterns, more like trading head and shoulders, what's it called again? Flag patterns and all those stuff. You're not an ICT trader. So I expect this low here to get run on. Okay. And if you also see, we have an inversion here, right? Inversion here. We have an inversion here. The price is generally closing out on the inversion. This inversion here. It's a valid inversion because it was the last inversion that got formed if before this low was taken out. So it's very valid. And as you can see, price is generally closing out on it. It closed below 0.75. It makes, this buy here for me invalid. Do you understand? So going into the week, I don't know what price wants to do, right? Price has been very, very, very sloppy in in the last few days. So I don't know what we want to do, but once we get a clear signal on, you know, on the sales, then I just want to shoot. But I'm bearish all in all. That's what I'm saying. I'm bearish. This is bearish. We could just, let's see, we could come back into this balance price range here. Yeah, let's see what happens there on Monday. We could get something like this on Monday. Something like this, then boom. Price to close on internal eyes here. Yeah. Yeah, I think this is nice. Price to call this internal eye. Yeah, right. So we could get something like this and boom there, boom to the downside. So I like to, of course, find our entries during the Q zone. Not Q zone or near your Q zone. So GBPUSD and bearish. So the last one I'll be checking out for tonight is USD JPY. All right. USD JPY. I think I shared with my free community. All right. So if you also want to join my free Telegram community where I share updates, I share signal sometimes live with my community. It's for free. You can check in the link. Yeah, check the link in the description below. And I think I'll also be dropping my X handle down below. So if you want to just reach out, yeah, we to check the link. Just check the description below, description box below, and you'll find all that you need there. Right. So USDJPY basically, of course, since you're bullish on DXY, I expect J to continue to buy. So I'm bullish on UJ. I was going to buy UJ just this concluded week, but price did not tap us in, which is very annoying. Okay. So price took out this low here, right? You don't need all of this. You don't need to go like 5 months back in time. You don't need all of that. You only need like a maximum of 5 weeks or 6 weeks, depending on the market structure or the nature of the market. But once you have what you um need basically from the previous weeks, you don't need to go all the way down to months back because you want to analyze what would happen in a couple of days to come. So as far as this position is concerned, I don't think there's any need for me to want to see what happened here or something. Yeah. All I'm looking reference to is just this recent high here, this recent low here. So this low here that took out this one and this recent high here, and perhaps this one here too. Do you understand? I think we have really equal high up here. So these are things that you just want to focus on. Forget what has happened down here or something. Yeah, that's for day traders anyway. So price took out this one into this what order block. But of course, I like to focus on this favorable gap here. See the number of times price came into this other block here. Sorry, the favorable gap and failed to close inside. All of them. Constant rejection of that zone. And eventually pulled off, give this what other block here. On the weekly time frame, this one here. This. All right, came down, did not close inside it. And so this is our next withdrawal on liquidity. Yeah, very clean. I'm not sure we would get an opportunity to join the market before that happens. But yeah, we are in a bullish market. Yeah, we're in a bullish market. And to me, it looks like a market maker buy model, right? Because it took out this internal low here. Took out the internal low. I'll show you that on H4. I think it looks clearer on H4 time frame. Yeah. Yeah, this low here. Took out this internal low here. I was hoping to buy from here. I think I was hoping to buy from here. Especially price because price engineered like relative equal lows here. It engineered this low resistance lows here. So I was expecting price to come down before pushing, but price just did not do that. Not how UJ behaves sometimes. UJ can be very nasty. Yeah. I was going to take my entry from this, of course, this zone A, but after it has raided this one, but apparently that did not happen. So if you're in these buys, right, I would advise that you take majority of your profits here. We could still push higher because of DXY. DXY is super bullish as far as I'm concerned, right? Could still push higher, but at least take off something here. So if we had gotten in around here, if we had gotten in around here, yeah, if we had gotten in around here, then of course we would most likely take majority of our profits out here. Yeah, because we are at extreme or premium and anything can happen, right? Final TP is not guaranteed, it's just an illusion. So you don't want to be too greedy that you don't know when to pay yourself as a trader. So all of this series of candles, right? Series of down close candles, 1, 2, 3. That is what an order block. So it could come down depending on what market wants to decide to do. We could come down here, yeah, because we also have a favorable gap in there, as you can see. So we just want to observe price action. We could come back here, right? Let me make this a little bit thicker. We could come back here, yeah. I'd like to see that happen anyway. Market open, come down here, then push back up. That would be interesting to see. So we could have low. I don't know when that would possibly happen, but possibly I'd like to see that happen and create low of the week maybe on Tuesday. Then from there, continue to push to the upside. That's if we do not expand up at market open tonight. Okay, so if we do not do that, I like to see price come down a little bit. Perhaps even tag this low here. We never can tell. We could still come back here and tag this lazy recall lows here before pushing up. But I like to see that happen before engaging the buy. I don't want to buy from here. We are at extreme premium. Price could just sell off from here. We never can tell. All right. So on H1, I do not think, yeah, this new low here was induced by new. So once you have a low like this, got yeah, a low like this formed, right? Below it, of course, the low usually would be considered as a draw on price. So going to the, I don't want to buy from here now. I don't want to do that. And you should not do that as well. That doesn't make any sense. So I think that will be all for now, right? For the major currency pairs. Every other thing, I think, yeah. Same thing with EJ, basically, market maker buy model. I'm expecting this eye to get tagged. So yeah, I think that will be all for now. Yeah. I strongly believe that the session has been very educative. And if it does, I'd like you to comment below. And you could also ask me or yeah, ask or request for analysis depending on the uh, currency pairs that you trade. Apparently, I don't trade all currency pairs. If there's anyone you want me to check, you can just comment send the comments here in the comment section. And of course, I would be willing to respond. Right. But if you want me to quickly respond, I think you should join the Telegram channel so that you can easily reach out to me because I'm usually more active there on Telegram than here on YouTube. But going forward, like I said, I have a couple of contents that I'll be dropping in the coming weeks. So I'd like if you subscribe so you get notified as soon as the content drops. They are going to be very, 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 very educative and eye-opening. I promise you that. Yeah, I have like I think two. Yeah, just going through one or two editings, but yeah, I'm super, super excited about what is to come. Yeah, and I can't wait to share with you all. So, these are my projections for the week. I strongly believe that market is king, and whatever market decides to do outside this, we will be there to react and not just hold on to our bias. Right? I'm not married to any of the expectations that I have as far as these markets are concerned. Yeah. So your duty as a trader is to ensure that whatever market gives you, be flexible enough to look from a different perspective and not hold on to your bias so you don't you know, get boned because you're being delusional or something. So that'll be all for now, and I wish you a profitable and an amazing week ahead. I'll see you on Telegram, and sometime during the week, I'll also share the video, right? Content that I have for you guys. So ensure to subscribe, like, comment, share with someone that needs to see this, and I'll see you on the other side. Thank you, and God bless.